problem with Americans looking at China is that we need to label it before we talk about it. It's like you're communist and therefore everything you do is wrong. When you do that, you don't get to understand the essence of what it's become as an economy.
Hey, everybody. Welcome back to another episode of the Richer Geek Podcast. We're going to take a little switch in topics today. We're usually talking about investments. We're talking about finance. Today, we have Emmanuel Daniel. He's an author, entrepreneur, and corporate strategist. He's a global thought leader in the future of finance and its impact on business and society. He's a member of Forbes Business Council and was listed as a top 10 global influencer in the fintech Power 50. And this was in 2021 and 2022. Emanuel founded the research publication consulting house. Is it TAB or TAB Global, Emanuel?
It's TAB Global now. It started as the Asian Banker. So, I started life, creating a banking platform, which gave me, an insight into the banking industries of 18 countries out in Asia. And then now that we are out in the Middle East and Africa, so we shortened that to TAB, and it's TAB Global now.
TAB Global. And, so tell us a little bit. I mean, you've won all these awards. You're very well educated. Tell us a little bit about your background and how you became kind of like this industry leader, this mentor in global finance and the platforms of especially like in Asia. So tell us a little bit about yourself.
Mike, I was looking at the other podcasts that you do and the people you have on your podcast. A lot of them have to do with fixed assets and how do you increase the valuations of that. I entered the labor market as a kid coming out of lower middle income family that valued the professions, and so I wanted so much to be a lawyer, and then long story short, when I did become a lawyer, that's exactly what I didn't want to become, and then I went on a journey looking for something I can create on my own, and nothing in my family indicated that I would be a business owner in my own right. But the business that I chose, unlike a lot of the experts that you have on your podcast, had to do with in information in the banking industry. And why did I choose the banking industry? Because the way I say it today is it's a cathedral industry. Everyone's got something to do with banking from cradle to grave, regardless of which country you're in. It pays the bills in my case. If I started in something like government or something politically sensitive, I might have had problems in Asia, which is where I come from. But just creating the banking platform enabled me to build a business that is truly global now. We do programs in Silicon Valley and in Seattle and in New York. And because it's information based, I'm held at the mercy of the information industry in a way that someone who builds a business around a fixed asset like property, it has a different dynamics to it. So it's fascinating. And then when I looked at what's changing the banking industry, I looked back at the asset intensive industries that create wealth today. And what I see is that the more you digitize that industry, the more ephemeral it becomes. It starts behaving like the information industry that I'm in. And that's how I ended up writing my book and doing work with corporations that need to think about how to deal with this, with the rules of the information age as it comes into affecting assets and industries that that different people come from.
Mm-hmm. Yeah, so it's very interesting. In the past, you had paper money. What we're thinking, it may be coin based, but basically real money to something that you don't even see. in the cryptocurrencies, in blockchains, gaming, other technologies. So it's almost like and what do you think is the future? Is our society going more towards something non-physical to something that is just going to be out there?
So, where mortgage industry is, some people may not think about it this way, but just think about this: that as the mortgage industry becomes increasingly digitized, the way in which you look out for caveats on your mortgage that you're intending to put together, the way in which you complete a transaction, the way in which you deal with each other, and so on. So a lot of technology is coming into play right now. It used to be that to complete a mortgage transaction would take you 6 months, and then it became 3 months, and then it becomes 2 weeks. And we are well heading into the phase where when caveats and when documents are lodged digitally today, it may well be that you can flip a property in 2 minutes. We're getting to that. And then when I look at things in finance that have become digitized, it has actually transformed entire institutions. So what happened to Silicon Valley Bank was that the deposit industry became digitized. And what it does to the bank is that you can have a bank run in an instant on the back of a tweet. Elon Musk tweets on a Tuesday morning, Wednesday morning, there's a $10 billion bank run, and you didn't even see it. And that's coming to fixed assets like mortgages and property, and then you start seeing difference in behavior. The next generation is going to treat property very differently from the mom and pops who would buy a property and sit on it for 30 years. And the reasons for which they would invest in a property will become increasingly ephemeral, and this will have an impact on property. And over a period of time, the next generation will not be viewing physical property any different from virtual property. Things that they own on a gaming asset, for example. The kids today they buy these little gaming toys at hundreds of dollars, just because they can. And that's the rules. That's where you'll find the rules that will eventually creep into, why and how fast and how easily, people would anybody would treat a physical property. And those were the thoughts that went in the back of my mind when I looked at the other podcasts that you had. And then I look at it from a global perspective because I travel a lot. I've been to about, I think, 123 countries now. And I see entire economies from the outside in, and I see that the U.S. has this advantage in that. It is a purveyor of transparent information, at the capital market side, and that permeates the way in which the rest of society behaves. And no other country in the world has that level of transparency and liquidity on the market front that the U.S. has. So there we go. I'm looking at everything from fixed asset to an entire market, and how all of that has an effect on how societies behave. So that was the conversation you and I were having just before we started, anyway. So
and taking that on another level as far as the future of global finance and navigating geopolitical challenges. Talk a little bit about. Here in the U.S., we look at Russia, we look at China as these threats, or are they threats? How do we work together? The tariffs, all these things, and as we go through the geopolitical challenges of the world markets trying to either go on their own or the dependency that we have on each other. So talk a little bit about. I know one of your specialties is China, and China is kind of a big topic for us Americans. So, what are you seeing out of China and what they're trying to do with going more independent? And can they do that? And just how we all kind of tie together as far as global finance.
The one theme that we can put our finger on in this conversation is the increasingly ephemeral nature of economies. The U.S. used to be a manufacturing hub, for the whole world, and now it simply isn't. And the reason is it both on the asset front as well as on the labor front. The U.S. is becoming increasingly ephemeral. Ephemeral means that you don't take pride in producing physical goods. You take pride in services, you take pride in brands, you take pride in information. All of these are ephemeral assets. The U.S. is no longer capable of being a manufacturing hub, and so that's why the Inflation Reduction Act, for example, which is trying to bring entire industries back. The horse on that one is bolted out already. I mean, it's not coming back. And then the U.S. has to start thinking a lot about what kind of an economy are we going to be the more ephemeral we become. So from the outside looking in, what I see the US is that it's become the most efficient economy in handling information. And on that front, no other economy comes close. And the ones which are like the US, transparent, high liquidity, and all that, we will find that we will end up having the same problems as the US. And when you look at the top 10 companies on the US stock market and compare that to the top 10 in other markets, in some markets the top 10 industries or businesses are property. In other markets they are trading companies. In the US they are technology companies that are adding increasing amounts of productivity to the economy. And when the market rewards companies like that, it then punishes companies that can't meet those productivity challenges. And that's where you see the effect on society. It ends up punishing parts of society that can't keep up with the productivity gains. And then you go out to Singapore, which is where I come from, and the top three industries in the Singapore market are banks. And those are services. They are legislated services. They are licensed industries. They are intermediaries. And the U.S. market doesn't have space for that kind of businesses anymore. The banks are way down the list in terms of being attractive. They are still interesting because they are purveyors of the interest rate regime and all that. So the thing is that the theme here is the increasing ephemeral nature of entire economies, and the U.S. is a leader in that front. But because it's a leader, it pays a price. Now, China has, China, to be honest, because I spend a lot of time in China, we should start by understanding what's right about China. There's lots of things that are right about China. If you are in China right now, you'll find a quality of life that is unmatched, even in the US. And how a socialist government, managed to ace that is a story in itself. The problem with Americans looking at China is that we need to label it before we talk about it. It's like you're communist and therefore everything you do is wrong. When you do that, you don't get to understand the essence of what it's become as an economy. But it also grew because it absorbed the physical production capacity of the U.S. In a lot of ways, the U.S. and China are forever intertwined. The reason why a lot of things are affordable in the U.S. despite high inflation is because China has absorbed the costs of production, and they've aced it. They're now the world's largest producer of almost everything, and that's an achievement in itself. But where they can't match the US is, or they're continuing to learn, how do you create markets? How do you create transparency of information in order to make markets liquid, and what's the role of the state in this. And on that front, they're highly challenged, relative to the US. And in creating capital and being able to fund that, the idea of society that they have, it has been the U.S. market since about 2001, which is when China became part of the WTO and plugged into the the global economy. To about 2014, it was the U.S. capital market that funded entire states. So if you take a company like Alibaba, for example, the state wasn't able to fund an Alibaba. And Alibaba grew from a small city called Hangzhou. It was the U.S. investor that, was Goldman Sachs, for example, that gave it its valuation because they wrote this narrative that the future is in large countries, and China is a large economy, and therefore industries can scale. And when Alibaba was listed on the New York Stock Exchange, its valuation went up to about $800 billion at its highest point. And what happens there is that 800 billion comes back to Hangzhou and creates 100 companies which are $10 billion and 1,000 companies which are $100 million. And then you see the magic of the effect of capital markets, of the US capital market on a country like China. Now what's happening is the state wants to negate that development. Right. The state has its funding, its own source of funding, and Alibaba has now fallen from 800 to below $200 billion. And when that happens, the cascading effect of capital, flounders, and then you see joblessness on the streets and so on. So in that regard, if we see the U.S. and other major economies in the roles that they play relative to each other, you see where the U.S. is at the frontier of the information revolution, frontier of the capital market revolution, and then exporting that globally. And then the rest of us get to pick and choose what we want to, how we want to benefit from that. And when we start talking about these things in geopolitical terms, in other words, as if it's a competition between states, we miss the point. And we miss the narrative. We miss the mechanics by which these relationships are actually operating. And you see that in the trade figures, who's buying from each other. So when China doesn't want to buy wheat from the US, it goes out to Brazil and all of the other countries, and then it finds that they can't supply wheat at the lowest cost that the US does because of its high productivity in wheat production. And then it ends up buying US wheat through other markets anyway, which is what Europe is doing right now with oil. It's apparently it's now buying Russian oil from India, so. And the same thing the other way around, which is that China, despite exporting to all the rest of the world, China is the largest exporter to 140 countries around the world. So 140 countries around the world cite China as their single biggest trading partner, but they buy from China. But despite that, the US is China's number one, exporting destination. If you take the US out of the economy, the Chinese economy will suffer. So that's how it all holds together. And if we want to put our finger on the one thing that we need to track in terms of how the global economy holds together and the value of the relative of the individual economies, it is the increasing digitization of assets, the increasing ephemeralization of the assets, and the US is right there in the front, and it pays the price for that.
And it's for a lot of listeners out here, younger listeners, they want more of a socialistic world. Some of the older people, and I don't want to separate older and younger, but but another portion thinks that there still has to be capitalism in the world. How can they work together, or it can't be all capitalistic, because then you just everything's run amok. You can't be all socialist, because then nothing ever gets done as far as creativity. How do they kind of meld together? And because one needs the other, and they work together. So a little bit about, because over here it's really divided on whether or not we need to be more socialistic, or do we need to stay capitalistic, or is there kind of an in between? You've been all these countries in the world. What's your take on that whole thing?
Yeah, so the one thing there is that the US has psychologically rejected the idea of a socialist state. The socialist solution is right there, sitting there for anyone who wants to listen. You just take a flight to Sweden or to Norway, you'll see how socialism works. And the US is the one G7 country that doesn't have a social safety net. Everyone is on its own. You create your own, 401k account, and you look after yourself. In most countries, by the time you get old, you get healthcare for free, and and social infrastructure like education is free right up to university in Germany. And I have German employees who who were studying right up to when they were 42 years old. And the state sponsors all of that. And so the U.S. has categorically rejected that as an economy, as a people. It has categorically rejected the idea of a social safety net. Then the question is, how does the local community create those social safety nets? That approximates what needs to be done, and that's why the U.S. is so dependent on the social fiber, and that's so different in different parts of the country. So having rejected that, the U.S. is on a journey that to find that equilibrium between what the market does to an economy and what the local community needs to do. As the world changes, if you're American, you're always not happy about the local community. But whenever I go to the U.S. and I stay with friends in upstate New York, in Syracuse, in Seattle, and different parts of the country, in San Diego, each of these communities are configured differently in terms of the local community. So a lot depends on the local community versus the state and the nation. And that's the dynamics at play in the US. If you want alternatives, you just go off to Canada, and the cost of your medicine comes down.
Yeah.
And why is that? That's because there's this collusion between the pharmaceuticals and the insurance companies in the US. And by the way, that formula is being exported to the rest of the world. And in the places that I live, in Singapore, for example, that the moment you have insurance, your health care cost actually shoots up.
Yeah.
It shoots up. And then it depends on the state to ameliorate the cost of healthcare. So then the question is, how much do you want a state to interfere in markets in order to create an equitable society? And we had this conversation. Different states in the U.S. handles it differently. And coming from Singapore, a state like Florida and what Ron DeSantis is doing, I say, well, that's what we do anyway, so what's the problem, guys? And as we talk, the funny thing is the people from the liberal states moving to a state like Texas or Florida, and then demanding that it becomes as liberal as where they came from, and that's where some of the rhetoric is, right? Yeah. So I think rhetoric that can go on forever. The essence, the trends, and putting your finger on the real issue, and then tracking how that's evolving. That's what we need to be dealing with. And I honestly think that I still meet people, immigrants in the U.S., who become insanely rich, and they're happy, and they most devastated countries in the world, and within one generation, they They run businesses that are insanely successful. And the reason for that is not just the fact that the US has got has opportunity, but it's got large pockets of inefficiencies that can be still cultivated. And the guys who figure it out, there's still a lot of wealth to be created from that. In the same way that there are lots of industries in the US where, because of productivity gains, you see mass layoffs, you see a lot of upheaval and so on. So it depends on which side of the equation you're playing.
Yeah, and that's true, and that's what makes America so great. And the viewpoint of an American is the fact that you can be an immigrant, come over here with dirt in your shoes, and then be a multimillionaire within a couple of years. That's what we call the American dream, and that's what makes us. It sets us aside from the other countries that say, I do business in Spain, and they don't want to be. No one in Spain that I've ever met wants to be rich because they get taxed more. They actually will make less. So they just want to say, hey, look, as long as you make me happy, I'll do anything you want. But don't pay me anymore. Just pay me enough because I get all the other stuff. And it's a different way of thinking. Before we have to go, we're approaching very quickly with our time. Let's talk a little bit about The Great Transition, your book, and just the personalization of finances here. What are some of the things, and I'm sure it's on Amazon and all the other places that you can buy. Tell us a little bit about the book.
Yeah, the one theme that I am exploring in the book, and we can explore in this conversation, and all of society is exploring, is the increasing personalization of society as a whole. In fact, as I was writing the book, as I came to the last pages, that's the conclusion I said, which I made, which was that I see the personalization of finance. And what is the personalization of finance? Because of technology and because of the way in which markets are evolving, the individual has greater control of his assets, control over the information on his assets, control over how he interacts with others, and that has an effect on the intermediation business, which is what finance is. And how institutions need to be, to hold together to continue being a player, because just through the disintermediation of finance. In other words, you don't need a bank to send money to each other, to put it simply, and you don't need a bank for a lot of things. So then the bank needs to think what is its role in intermediation. The technologies and the markets don't reward intermediation anymore, not in the way that it used to. And so what's true in finance is now becoming increasingly true in society as a whole. And what we are going through as economies, as global economy, is that the individual is being empowered. And so then how does an economy hold together? How does society hold together? What kind of rules that you need to hold societies together? Because the individual has more information on his assets, on his in his ability to interact with each other. And those issues affect people in the US as much as it affects anyone in China. Institutions need to figure out how they want to play. And so in this conversation, the increasing ephemeral nature of assets and the empowerment of the individual is transforming how we become rich, how we hold together as a society. And that's what my book talks about. And the more digitized an asset is, the easier it becomes to transact them, and then the rules by which we transact them will change. Now, a lot of what I'm saying looks like far-fetched and into the future, but if you look at what happened to Silicon Valley Bank, that's going to happen to everything else that we have in society. And when it happens so quickly, then we need to put our finger on why that change came about. And that's those are the things that I'm dealing with. And then I help corporations try and figure out how they want to play, and how they want to evolve. And even as we speak, regulators are putting in place new rules. The tokenization of deposits is well on its way into the US right now. The Fed is talking about it, the Treasury is talking about it, and it will have an impact on both the banking industry as well as how individuals look for opportunities and the global and global geopolitics as well. So the funny thing is that I thought I was writing a book on the future of finance, and then by the time I ended it, I said, I know what, all of society is transforming this way.
Yeah, it's amazing. Emmanuel, if someone's listening today on this podcast and they want to learn more, where can they find you? Are you on LinkedIn? Are you on any of the social? If they want to get in touch with you, how can our listeners find you?
Mike, I recently started doing podcast videos. The word podcast is wrong, but just videos talking about some of the things I'm talking about from a historical and economic perspective. And I have a YouTube channel, Emmanuel Daniel, author. But even if you didn't know that, if you went to my blog page, emmanueldaniel.com, it'll take you to everything else. So that's where my ideas as they evolve come on stream. And I'm just always curious when I'm on a podcast with someone like you, where your listeners are mostly hard-nosed, investors. Whether something that I'm saying is far-fetched. And I'll say this, that the digitization of assets is transforming how you need to look at how you create wealth and hold your asset, the valuations on your assets going forward.
Yeah, it's amazing. I'm now seeing hotel investments, syndications that are all tokenized. And it's just like, oh, I don't know, but it's going down that road where there won't be any cash. It's all going to be tokenized. And it's just amazing. Emmanuel,
and tokenized is transforming asset holders everywhere. Small towns in Thailand and all that. So yeah, you got it.
It's crazy. So Emmanuel, it's been a pleasure. Ladies and gentlemen, this is a break from our normal type of podcast, more informative. It's about global finance, where it's going, and I hope you learned something with Emmanuel. Pick up his book, The Great Transition by Emmanuel Daniel. Emmanuel, it's been a pleasure. Thank you for coming on the podcast.
Mike, thank you very much for having me on.